I do want to pivot a little bit and talk more about the city funds and how you decide what city to start your city funds in. I find that very fascinating. You have right now Miami, Dallas, Austin,
Mhm.
Tampa, and soon Denver. So why those markets?
Yep.
What metrics are you looking at to pick those markets when creating a city fund?
Yeah. So we do a couple of things, and the first thing we do is to enter a state, we first get our origination license for mortgage, primary and secondary. That takes some time. Just that type of stuff is slow, and so we do that ahead of time. That's just a general entry point. But then when we look at the specific markets, we look at how does this MSA rank in terms of population? What is the current trend in terms of like GDP, other economic factors, employment rate, what's the airport travel like? Like, is it an active city? That way we have some, we kind of, we try to mitigate the go with your gut. You go with your gut, you might pick a really, like I'm from Louisiana, New Orleans is really cool. I think it's really marketable. But if you look at the stats don't really, make sense. So we look at that. So we look at like, what is the general economic pulse of this metro area? We look at the housing stock. That means like, what type of housing is it? And so we look for areas that have a lot of what you call PUDs, planned unit developments, more standardized housing. It has a certain shelf life and more predictability and a um, more digestible buy box. It mitigates some of the underwriting. I'll give you the alternative. The alternative would be like San Francisco or Boston, really cool markets, but really nuanced, kind of weird housing because a lot of older housing and harder to really underwrite and understand some of the nuances of it. So we look at that and we look at generally the marketability of that city just the same. And so is this city something that people are relating to? Unless Austin, for example, has a big college, South by Southwest. So it's a lot of stuff that can people relate to it and can they experience it? Because that's what we want them to come into. Like, hey, I went to school in Austin or I just vacationed in Miami, et cetera. And then the housing market, what's the home price appreciation look like over the last 10 years, 5 years? What's it forecasted to be? Uh, all that factors into it. And there's kind of a sweet spot that all these fit into.
Can you walk me through? Let's say I have $1,000. I want to invest in the city fund of Miami because I love Miami. I think it's up and coming. I think it's going to continue to grow and get bigger and bigger. What's the minimum amount I can invest? And then how do I track my investment so I can see it increase or appreciate over time?
That's a great question. So to get into Miami, the minimum amount is just $100. It's the same for any of our funds. That is not the typical investment amount or what we recommend, but it's a price point that we thought was most accessible. So if you wanted to place an investment, you would download our app and then go through the basic onboarding that you would do for a WeFunder platform or a Robinhood platform. You call it from the business side, it's KYC, know your customer, and AML, anti-money laundering. We got to make sure we know who you are and that you're not someone pretending to be someone you're not. You're not a bad actor. Very basic stuff, right? So then you have an account, you swipe to make an investment, you connect your bank account via Plaid. Imagine most people are familiar with that. Um, and it's pretty quick thereafter. I mean, you now have shares issued to you in that city. So you'll receive your subscription agreement, which is your contract granting you those shares. And the key thing with the funds is that we update share price based on the asset value, that we call it net asset value. And that's based on actual month to month mark that we're doing on each equity investment. We're just re-evaluating each home. And so you come in and you say, okay, I got in today. Right now you really want to focus before the end of the month because you're going to get share prices this month. They're going to update on 9/1, where actually the team just filed them with the SEC. So that's how you're going to see, okay, I think you could pick the market, like what market is doing well. I'll be honest, Austin is kind of doing this and then kind of like, kind of leveling. But if you go long term back, it's still like way up. It just had a high false peak, but it may be steady for a minute, right? But Miami and Tampa are booming. I mean, they're growing like crazy. Tampa's actually the highest growth. Uh, but that's just, read the internet. And then generally our investments are going to align with that. So you can say, okay, you picked a good one or you picked multiple. You can see your share value go up and you can track all that in the app. It's very heavily, geared towards driving your attention to what is net asset value? How does that translate to share price? This is actually directly correlated to those real estate assets. And, the value of your investment is going up, currently up, but always has opportunity to go down too. But in the current case, we intend to continue making good investments, and it's going up, and you can track that all within the app.
And then circling back to the mission statement, making real estate accessible for everyone, I don't have to be an accredited investor to invest in the city funds of Miami, Denver, Tampa, right? Anyone can invest in them.
Absolutely. Yes, anyone. We spent almost a year, 10 months, working with the SEC and FINRA. As you can imagine, this is adjacent to other concepts, but we really wanted to get everything set up. And October of last year, we were SEC qualified with these funds.
That is awesome. So it's like
So
being able to
anyone.
buy stocks, but in real estate, and then you can track it month to month, see it appreciate. Oh, that's
Exactly.
sweet.